Be Wealthy and Smart, episode 1093.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the bull case for stocks, because things are looking very, very bearish out there right now, with the Fed having raised interest rates for the third time by 75 basis points, or 0.75%. So far, the lows of June are still holding, but many people are losing hope that this market is ever going to rebound, as indicated by the sentiment survey of the AAII, the American Association of Individual Investors Sentiment Survey. What that survey said is that 60.9% of investors are bearish, expecting the market to go down in the near future. 21.4% are neutral, and only 17.7% are bullish. You can put me in that bullish camp. And today I'm going to explain to you exactly why I feel that way. But one thing I will point out is that if there were one indicator that was very simple, but very accurate and effective, it would be the AAII Sentiment Survey. Because when you have so many people bearish, it just can't happen that way. You're going to find yourself on the opposite side of that bet. And I talked a little bit about that in my podcast about why the crowd is usually wrong. I've seen it happen time and time again, and it's the least expected thing, but it's usually the way it works out. I've been through major crashes in my lifetime, and when the major crashes happen, it's not when everyone's expecting them. It's when no one is expecting them. And when the major bull markets happen, it's again when no one is expecting them. So I think we're getting to the end of this sell-off. The lows of June are still holding. We have resilient earnings that have held up better than expected year to date for many companies. We never got the big write-down of earnings that was expected, and that is really important. If your earnings are still strong, that can support a better stock price. We know that most of the inflation that we've seen was tied into the price of oil and what was going on with sanctions and the war with Russia and Ukraine. We know that that played a big role in this inflation, and that oil is a primary driver of inflation. So now that we've seen energy prices come down 30% from $120 a barrel to $83 a barrel, that is a huge drop, and I don't think we've seen that filter its way into the economy yet. That creates demand destruction. When you have lower usage of oil, lower demand, prices drop, that's going to eventually show up in the inflation numbers. But it takes time for these things to work through, and the Fed has been raising interest rates so quickly, we really haven't had the time to see the inflation numbers come down the way they really should, and they should start falling hard fast. We have real estate prices softening and the whole entire real estate market coming to a much slower pace, where large parts of the mortgage departments and banks have even been laid off. The days of multiple bids and offers way over the asking price are gone. And now homes are starting to sit on the market and get their prices reduced about every 2 weeks pretty systematically. Unemployment is about at 3.7%, and there's still plenty of jobs around. So I want to make a point, and that is when I make a forecast or talk about being bullish, I'm not talking about what's going to happen tomorrow or for the next week for that matter. Now we have a wild card out there with Vladimir Putin talking about using nuclear weapons and expanding the war. So there is a wild card out there that could cause some kind of a shock to the system. But beyond that, we have the Fed meetings in November and December to look forward to. So we have a bit of a gap and we have some time here where I think inflation can work its way through and really show us that it has dropped a lot more precipitously than people expected. That is going to be a positive surprise on the markets. And the shorts right now are so vast, and the markets are all leaning to that one side, to the short side, that any good news surprise is going to work like a spark and then creating a blazing fire of a bull market. And that's what I think we've got set up here. So taking out the wild card of nuclear war, everything else looks like it's preparing for a bull market. Not just a bull market, a rip-roaring, very strong bull market. What could change my outlook? Well, the Fed would have to get much more hawkish in November and December to change my mind. They would have to really talk about raising rates a lot more than what we've expected because most of it's already priced in. So if they got extremely more hawkish, that would be very bad news for my outlook. But I believe the Fed has already done enough to bring down inflation dramatically. And we definitely are going to see slowing because most of the indicators we've been talking about are lagging indicators. They're not forward-looking indicators. One of the forward-looking casual indicators that we got was the report from Federal Express that shipping demand and their package shipping business was dramatically lower. Why? Because people aren't buying things and shipping them through Federal Express. So that's one of the proxies that can be used looking forward as a forward-looking indicator. And that tells us that business is dramatically slowing, more so than what the Fed has taken into account so far, I believe. So it takes time for these higher interest rates to work their way through the economy and to slow inflation. But combined with the housing market slowing, oil prices going down, less spending, and by the way, slower revenue by a lot of small businesses I'm hearing, these are things that are really going to show up, but they take time to show up. But before they do, the market usually figures it out and starts to turn first. So I'd give it a week to 10 days, but I think within that time period, we'll start to see signs and confirmation that inflation is starting to show up lower than what most people thought. And that is the bull case for the stock market. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.